Okay, hi there, guys. Hope we're doing well today. It's a beautiful Monday. There's only a few in at the moment. I think I have a few more dribble in a bit later on. People will be coming in shortly. Um, we'll get started though. Now, firstly, thanks very much for joining me in the Trade Setup live stream for the 17th of June. So chugging away nicely. I think the market's down a bit today. Got a bit of a mixed bag for us. We've got some real crackers and then a couple of stop outs, which is unfortunate. That's the way it goes. Forget and reset. So for anyone that's new, welcome and thank you for joining us. And just remember, if you like what you see, it'd be great if you could spread the word for us. You've got a top left-hand corner, we've got Twitter. So if you're linking to us at Twitter, you'll see a bit of material come up there. Some that we put up, we don't necessarily put up as alerts for the Trade Setup app. But there's stuff that we're looking at, stuff that we find interesting. It's always good to keep a hold of us on Twitter. Top right-hand corner is Facebook. So they're pretty much the same stuff. We'll go up on both of those. So take your pick or take both. And the bottom right is YouTube. Subscribe to us at YouTube. That way you will get an alert anytime we go live through YouTube on a talk, whether it's a trade setup thing or it's just presentations we're doing. And we do plan to do a couple soon. We're just going to get ourselves organised. Things happening everywhere. So busy times, which is great. It's just a matter of getting on top of the important things, I guess. Now, I hope everyone had a great weekend. I myself, it was pretty, not really action-packed, but my wife's got me doing a bit of gardening. It's all good fun until you wake up the next day and your back's a bit stiff, the arms are a bit stiff. Not as young as I was a few years ago when I was doing it. So, oh, it's all good fun. That looks good. It's good to get outside. Um, so the US on Friday night. Let's just go over. Well, for starters, today we'll just be plugging away on what's happening in the markets overall. Not much is changing. I mean, it seems to be Trump's picking fights left, right, and centre. Now you've got issues with a bit of tensions increased. Geopolitical tensions have increased because of Iran and the US. US blaming Iran for attacking the tankers, the oil tankers, which, depending on what you read, this is a line of attack they've done before. Weapons of mass destruction. Have we ever found any? There's not much evidence, I don't think, at the moment, which Iran did it, and they're denying it, which of course they would, whether they did it or not. But yeah, all it's really doing is just creating that extra bit of tension in the global markets that we don't really need right now. China on the weekend also come out and said they're happy to have a fight. The people are not going to shy away. It's going to be a lot longer than what they expect. So they're not talking up anything soon, and they're not bowing to the US's pressure. Whereas Trump's coming out and saying, okay, we expect a deal done. And he's expecting, I'm not sure what's going to happen around the G20. I'm not sure exactly the dates on that. The G20 coming up when they're meant to have been having a meeting between China and the US and trying to nut something out. And if not, okay, tariffs go up. China's already saying, we're happy to batten down the hatches and bring it on type of thing. So there still is that a lot of headwinds. And then you've got, on top of that, you've got potentially Japan and China coming in the firing line. Sorry, Japan and Europe in the fire line too for tariffs. So overall, I think just that tension around the markets, and we're finding, even though Trump would talk up making so much more money from tariffs, the income, he's spruiking at the people that are paying the US citizens. It's not overseas. The US citizens, once they're imported, the tariffs are chucked on. They're just paying more money. So what it's going to do is obviously the number of imports is going to come down because people are going to buy less, but the extra income is not coming from overseas, that's for sure. So yeah, he's like I said, picking fights everywhere, and it's just causing a few problems because, well, it's causing a lot of problems. It's just that when the market's getting onto those highs, the US is up at all-time highs. We're sort of swaying at the highs at the moment. Europe as well, and there's just these headwinds. And I think was the latest one, Qualcomm. I think it was Qualcomm that came out, and their chip manufacturer, they said their guidance has been lowered because of tariffs. Less sales are dropping at the moment, so not sure how that's going to play out. Whether it's going to be down the track get a bit worse, or there's going to be other companies going to start popping up saying, sales revenue is going to drop because of the tariffs. What they're doing with tariffs. So yeah, there's a lot of headwinds out there still at the moment. The one thing that interested me the last few days, reading about it was the US dollar. Generally, so what they're looking at doing, obviously, rate cuts. I think they've got a meeting on Thursday this week on interest rates, US interest rates. Now they're expected to cut not this time around, not on Thursday, but for next month. So for July, interest rates are expected to cut. There potentially is cutting another one or two by the end of the year. That's the consensus in the bond market anyway. So if that plays out, technically you would expect the US dollar to head south. Now it keeps bouncing, and it keeps bouncing because in comparison, I think basically Fed reserves around the world are trying to devalue their currency. Aussie is happy to drop rates and try to push the currency lower, drop their drop their currency rates. Same with Europe. It's just better for exports, and it helps their economy. So it seems to be everyone's racing, and I think the economy that's doing, I guess, how do you say it, is slowing the least or is doing the best is obviously the US. So even though there could be rate cutting, it may not get the dollar effect, the lower dollar effect, which they would like. And there is buying into the US dollar, which is interesting because they were talking about rate cuts. It get pressured down, but I think it's been straight back up again. And it's, I think, not sure if it's monthly highs or weekly highs. The highest been in the last few weeks was Friday. It bounced on Friday. So, if they're talking about interest rate cuts, it sort of did buoy the market. The markets popped up, the equity markets or shares did pop up. They're back up towards the highs again now. But the US dollar, which I'm assuming they like to devalue the US dollar, just it helps growth, helps their own economy. If they're not going to get that effect from rate cuts, it'd be interesting to see how it all goes. Because that was sort of, you'd expect it's a bit of a twofold effect. The market would expect the interest rate cuts to stimulate the economy, but it may have adverse effects on exports. Now, what am I doing? I'm just going to bring across the charts now. I'll get rid of that if I can. Doesn't like me, does it, today? There you go. Let's get on to. I'll get on to just to have a look at the global markets, just some charts, just to see where we are. How's everyone going? I'm down 20 at the moment, 18 points at the moment. We're down over 20 before. So it's Aussie dollar got knocked around a bit this morning. I think if anyone saw that. Gold got knocked down a bit. That's probably more that, when things have gone so hard in one direction, there's going to be some profit taking, and the higher it goes, the harsher that profit taking is going to be. It's just whether or not this is a pullback or a correction lower. I'm favouring a pullback the way the action's going at the moment, so we'll see what happens on gold. But if Aussie dollar, gold in Aussie dollar terms, if the Aussie dollar keeps heading south, it's going to be buoyed even if gold presses down. But fundamentals aside, it's about when markets are popping and they're going hard, a lot of it becomes more about psychology, sitting on profits and wanting to book it, the nerve to hold the trade, all that sort of stuff. What was I looking for? Markets. Indices, there we go. Wrong one. I'm not doing too well today with the buttons. All right, so the Dow, this is on a daily chart. I mean, you can see it's getting a bit tentative up here, but that 26,000 is still a level it's just popped up above. You can see back from May, it pushed up above that level, and that's really the anchor. You can see 1, 2 sort of major corrections lower. Really, that side of price action, we always like to see that. It's cleaned out a lot of buys, a lot of these late buys in the market sort of grinding around, cleaned them out, bang. And this could be easily a bit of a pullback here, below 26, build a high low, and then go again into new all-time highs. I mean, the weekly's not a bad position at all. The way it's reacted off there, you would expect some sort of potential consolidation around here. I mean, whether it's going to pull back and make that high low we expect, or just chop around sideways. Market can pull back consolidate on a pullback just as easy as it can consolidate sideways. Consolidation sideways is probably a bit. You prefer to see that because it's signs of a stronger market, especially in individual shares. If you're looking at it, the market pops up. A lot of people get caught waiting for that good correction so they can get in at a cheaper price. But if it doesn't correct and it's showing some serious signs of strength when it's holding and consolidating highs, 1/3 retracement rather than 50% retracement, the top third at least we always look at, then it's a good sign of strength. So if the market can sort of chop around here, and get a really narrow range days, that could lead me to believe it's going to power through those highs at around 27,000. That's your weekly chart. Good blowout coming to the end of last year, like we've spoken about before. Daily. So yeah, it's just in that level where you would expect just in the daily a bit of the market to edge lower. But we'll see what they say. I think most people will be batting down the hatches a bit for the next couple of days in the US, just waiting to see what they say ahead of the interest rates. To see what they say on interest rates. I mean, the Fed could come out and change their mind completely. Not change their mind as such, but really throw a bit of a spanner in the works. And like they've done before, we're expecting, although they raised rates when they're expecting it not to, and then turn around the next time talking about rate cuts. So they're probably finding it difficult, just like everyone else. Now that's the Dow, the S&P. Why is that not doing that? Don't do that. Go right there. S&P, much the same. Same sort of price action. It did. I think it took out the highs here. High 29.54. Yep. So I did make all-time highs back in April, end of April, start of May. It is still, it's in a good position on the weekly. That pressure, the way it's got, you can look at the pressure that was down here. Sellers really took it lower, right than the 23.50, whereas the selling pressure, close to the sort of the same amount of selling pressure piling in, could really only take it down to 27.50. So that's a good little sign of strength. MAs are up, bouncing off the MAs. We just have to see how it goes the next few weeks. Not saying it's popping up, but ideally that's what it's looking like on the weekly charts anyway. The daily, I think, has a bit of work to do to stay above the MAs. If we can chop around here and then start to lift again, that'd be great. Now, we won't worry about Europe. We'll look over at our market. Our market is well and truly up. You can see nothing's really changed there. We're bouncing off these MAs, bouncing here, back in March, again last month, bounced off, and then started this month as well, and powered higher. So when you get this sort of rejection down, the market sort of grinds down and boom, it did it here, did it here, did it here, a couple of green days. It just piles in the green days one after time, did it back, way back at the start of February. And it's done it again this month, start of this month, really bounced off those MAs quite strong. Of course, the higher you get into, actually we've taken out those weekly highs, the higher you get without some sort of decent enough correction on the weekly, then the more tentative players you're going to get. Everyone across the board. I mean, it is a bit tough at the moment. You're getting stocks that'll go, then turn around and reverse on you. A bit of news out in the US, they turn around and fall, and get stopped out. I mean, I've done it. You get your stop a little bit too close, get chipped out, and it bounces again. So, and when the markets are getting stretched, it's a little bit hard to keep looser risk on a lot of things because, especially with the headwinds, what's going on at the moment, tariffs left, right, and center. Then you got Iran and US, oil, all these sorts of things are just causing a few problems, and it's making harder for, I guess, especially at higher levels, it's making it harder to hold positions and not book the gains or not tighten up your risk and all that sort of stuff. So things can get a bit choppy. You can get chopped out. You have to jump back in. Some stocks will just go hard. It's not your traditional market where it's just nice and easy. It's a bull market. It's just grinding high. It's really, not struggling. I mean, the market is still definitely up. It's at that level. It's getting a bit tougher. Now we're still gunning for. We were talking about this a long time ago. That trend, the monthly trend, has been up, hasn't changed. The weekly trend really hasn't changed. All this sort of fear that drove that market down, I'm still attributing that more to a lack of volume in the market coming into Christmas, and especially after September, October, when the market started heading south. It's cleaned out enough people, and then the market's thinned out, so it was a lot easier to get that market to move lower and for shorts to come in, smack it down. There's no buying liquidity in the way of the market to try to support it, or not your traditional enough volume to really try to support that market pressing down. So that pullback was quite, maybe just a bit extended. And if you look back, actually, if we do that, it's probably smack down on the support, the monthly support. Just take a quick look and go away. Just see where that is at the moment. So that's not the biggest. There you go. So look at that. I mean, that's a few computers are playing a bit of games there, but you can see it's come straight back down to that weekly, bounce off that week, so that monthly long-term trend line up, and it's powering up. So really the next port of call without any real resistance in a way is probably around that, the all-time highs. We could easily touch on the all-time highs before we even get some sort of correction. And this is the monthly, don't forget. There's probably going to be a bit of chopping around, maybe on the weekly and the daily. But at the moment, potentially that's where we're looking up to all-time highs, and we would be. Europe did it a long time ago. US has done it a long time ago. They've hit all-time highs many times before in the past since the GFC, but we've been struggling to get back up there. And it looks like this could be the charge we're making, potentially just up into those highs. Now, it'd be interesting to see whether we fall short, consolidate, and if we consolidate, that's going to be a good sign. If we don't, and we sort of pop through and then pull back, I'm a bit more skeptical that's going to continue, and I think that's where we could get a good correction. But again, all we can do is speculate, plan ahead, and wait till the market starts showing us some signs of what it's going to do, or showing us that hand a bit, I guess you'd say. So that's it at the moment. What I might do is just go through a couple of stocks, just chuck in some shares that you're going to take a look at. Anything, put in some codes into the chat. I haven't got too many people on at the moment. Yeah, just chuck in some codes and we'll start looking at them. I've got a couple that I'm going to get into. Just some bigger moves. I just want to go over this, especially a couple, mainly VOC and APT. And actually CLI that we've got, we haven't got. So we'll start with this one. This is CLI, Crop Logic. I just want to talk about these. There's the psychological game behind the trading. We're all susceptible, and we're all susceptible in different ways. I mean, potentially myself is a bit more, when I'm sitting on profits, that's my hardest point, sitting on profits and holding, just trying to hold and ride it out until you do get proven wrong. Sometimes it's easy, but sometimes it's a lot harder, and especially if you start digging down to see what the news is and see the talk on it, it becomes a bit tough. So there's a massive psychological game to get in and to get out. And some people it's getting in is easy, some people getting out is easy, and vice versa. Some people it's hard to get in, some people it's hard to get out. There's all these sorts of things that happen. So I'll just talk about these three stocks as good little examples of why it's important. However you trade, if you're a fundamentalist, read the fundamentals and then decide what you want to do. I'd also suggest, if you do use fundamentals, to get some sort of entry criteria from your charts, because without a doubt it shows you where people are getting in. There's no way to argue that, whereas you may not see that in the fundamentals, but the fundamentals will tell you the story, and it's probably very important to, I think, to know the story a bit, at least, to at least know what's going on, so you can hold it. So it makes holding a stock, if it's pulling back, if it's getting a bit of a clean out, it's washing out a few traders, it's trying to fluff out people before it has its next leg up, next run up. It's important to know the story so you can commit to holding, or you might think, well, there's never really a story on this one, and I'm sitting in profit. It could just be a bit of a pump, a bit of a rush of blood for traders thinking something, expecting something, but there's no real story there to support the higher levels. Now, so all these sorts of things play mind games with you, muck around. This is one that I had. You can see that volume really picked up. Let's just make it. Don't worry about what happened in the past too much. This is back in March. Your volume started picking up. It was about here. I think it's 3 point something when I got in. 3.4. I think it's 3.2, 3.3. So it's somewhere around this stage, just before I break out into those highs. Now, I really liked it. I thought, okay, good story. I started reading a bit about it. And as most people know, I don't read a lot. I haven't got the attention span, but enough to go through it and just go, okay, the story's quite solid behind it. It looks pretty good. And there's news out, there's news flow. What I didn't like was the actual, as it was creeping up, is the price action. So the price action, if you're looking at the depth, they kept loading up on the offer. So, and I'm always wary with little stocks. This is a tiny one, a little stock that they can just, it'd be a bit of a pump and dump. I mean, not all of them. I mean, there's a lot out there at the moment. They're pumping it up. The talk is big, and then bang, they'll just unload on it. And basically, it's what it is shifting funds from bigger players to owners to the retail investors and just dumping the stock on them. And I think we just had it dropped out there for a second, guys. Instead, the volume, the way it's trading, suggested something different. It suggested it could be a bit of a pump, and they were just offloading into it because every time the someone was chipping away at the offer, bang, they'd reload it. Even if it took out a couple of levels, they'd reload it, and it might come down, it might go up 0.2%, come back down 0.1, that sort of thing. So I ended up taking it off, and I think they did a capital raising. I took it off just above 4, booked the gains, it pulled back, then I forgot about it for a while. And I think I did trade it back up here again just recently. Back up here, it had a little minor pullback, and I took it off at about 5.4 on Friday. So I had this little run up, so I bought it back at above 5.4. But anyway, what I found a lot of, once you start reading it, once you're getting into profit, you're looking for some sort of reason. You're looking to validate whether to hold or to sell. And you start getting into the news flow of it, and then the psychology of people talking about, okay, it's really good because of this. Okay, it's really bad because of this. And you start trying to weigh up, and it's very easy when you're sitting on profits to start leaning towards the negative. Well, this is for me anyway, personally. Start leaning towards the negative side of it because you don't want to see this. If they're right, if the negative side's right, it's going to pull back. It could be a pump and dump. Okay, I want to take my profit now. Or shall I listen to the other side and say, look, just hold on to it because it's looking good. Technically, it did have a bit of a ramp up here, had a bit of a pullback. Technically, on good volume here, good supporting volumes that come back up as it's pulled back, light volume, started building on this little pop up here, good volume on Friday. So this to me now is actually suggesting it's going to continue on. But at the moment, I've probably just been fluffed out of it. So I'm really just looking to see if it can pull back, reset, hold a high low, see the volume come in, and then really just start to forget about the actual, the talk behind it, the chatter. So I think it's important to really do your own research on what you think is going to happen, and then use the technicals to support that view, and just forget about what everything else is saying. This would have been a great little entry back in middle of last month as it started. You had that pullback, sitting on top of the MAs, a little minor double bottom here. You can see that red, and then started to lift again. You can see it's about that red candle, and the volume picked up compared to the other days. Solid volume come the next few days, so that would have been quite good. Entering, say, somewhere around 3.5, getting that run up, you could probably offloaded some into the highs as it failed, come back in, buy it on this green day, even buy it through that high at 4.3, and then just get this little pop and try to hold on to it. I mean, it's still going strong. You can see the volume is still coming in. A couple 100 grand just gone through at 5.6. Before that, 66 grand, 79 grand. So you can see the volume is really starting to pick up as it's starting to press higher. So really what I was saying on that one is, even though anyone could be selling for any number of reasons, and it's hard to make sure that you commit. You've got your reason why you're buying it. You've got your fundamental reason why you think it should go a lot higher. You've got your technical for your entries and your technicals to stay in, and try not to listen too much of the story surrounding it, because who knows who's right, who knows who's wrong, and who knows the ulterior motives of people that you're reading, the news that's coming out, and that goes for Twitter, and that goes for your big companies too when they're giving out a sell or buy recommendation. We all know that they could say be selling something when it's going up. We just had a recent alert they were all on hold or sell, and the market just continued to tick higher. I mean, so it just goes to show that no one really knows what's going to happen. All you can do is trade what you see. So that's one. It's turned out all right for me, but I wish I was still in it. Wish I didn't get fluffed out. I think on those highs, but it was a 20 or 30% gain. It's really hard when you're sitting on 30% to just not take something off at least. So anyway, we'll see on that. What was the other one? VOC I want to touch on because that's just been an absolute mess. If we go back, let's go back to the weekly. I think I spoke to someone a long time ago back here, asking what do I think? And I mean, from the fundamental story, I don't know. Obviously something untoward's happened there. It's had a good ramp up, bang. I wouldn't say that's so much a reversion to the mean. That's an absolute sell-off. So I think by looking at it, the base was looking good here, but just what's happening in the last, I don't know if anyone's following it, the recent takeover, the offer that come on, then got knocked back, then AGL just come back on doing due diligence and just pulled their bid today. And that's why the market's down, 27%. It's not so much probably that AGL pulled it, it's that it's happened quite a few times now. And it's really getting choppy. So this one is one that's going to be hard going forward. For me anyway, I wouldn't touch this VOC just at the moment, because if somebody's coming in and doing their due diligence on it, making an offer, Maybe their terms weren't very good. Maybe they weren't happy with the terms, but it could be something in the books that we don't know that's really getting the companies to shy away or pull their bid and not happy with it, especially at the prices which their um, VOC are asking potentially. They might be asking something for around 450, and after a bit of a look, they're looking at going, that's not worth anything around 250 or $3. So they go, well, if you can't come to the party, we'll just pull the bid. And if that is the case, this could have a few issues going forward. I mean, it's yet to play out just yet. We're yet to find out, and I don't know my fundamentals as much, or looking at spreadsheets, not spreadsheets, but balance sheets, profit and loss, and all that, to be able to pick it out if there is something that's not looking that great. But either way, this is one that's, if you're holding it, it's going to hurt because of the psychological game that's playing. It wasn't looking too bad. Back when it got this offer, bang, up to 460. They threw in the towel on that one, boom, straight to 370. Another offer, AGL, up to 440, bang, they threw in the towel. So it's happened twice basically in the last month. That's not a good sign for me for any stock if that's happening. If someone's such a good thing and they're trying to sell it and everything is good, maybe they're just asking way too much. And everyone that's coming in is doing their due diligence, because I guess you've got to put in an offer, do your due diligence to find out exactly what's going on in the books. And they're just not happy with it. Going, no, that's not as good a picture as you're painting me. So, but what I think that's done the last couple of days is really, for any new buying, and I wouldn't step on things like this at all. If it's around $3, saying, okay, it's really, really cheap. Look how cheap that is. There's funny business going on, all that sort of stuff. Maybe there's not funny business going on. Maybe it's a basket case and we don't know it yet. Anything. So things like this, when you're in, could be really messing with your head. But if you're out, just reassessing it the way it's going. I don't know if anyone's got that, by the way. We were looking at a buy, I think, through here. I'm not sure whether we did or didn't. I can't quite remember, to be honest. Let me just see. We've had this once, actually, February, had that 345 to 338. So somewhere here. I think we got chopped out on this candle by the looks of it. Yeah, I'd say we got chopped out on this candle. We bought it in here, rallied up. So in February, so we bought it in the 6th of February and got out on the 27th of February. So we bought it somewhere around here. Yep, somewhere here, bought it up, got washed out here, and then it should continue to go up. So it has been a bit of I found it tough. I mean, that was looking good. If you're looking at the weekly, get rid of this last, say, month or so. It was looking good, starting the base, come all the way down here, 1, 2, touch down here again. So maybe your bargain basement's around $2. Who knows? $3, who knows just yet? I just don't like the action at the moment. APT is the other one that I wanted to go over. I think this one's a good one for the psychological games that could be played, and where you're either got to pick a course of action. And this is why, God, you can make a thesis, I guess, about this stock. Just look at it from the start. So APT obviously had a good run up, popped up August, was that last year? Yep. Good little pullback. So there was something that triggered the pullback. I can't remember what it was. I think someone was talking about the debt or whatever, but yeah, bailed. But then buyers were stepping in. Even with all that negativity, it was stepping in, they were soaking up above $10. So I think we got in just at 10 something, 14. Excuse me. So we've been in here. Actually, we were in way back here. We've been in and out of this stock, I think, before it changed names. Before it went to APT, it was something else. Does anyone remember? AFY. Let's see if we can get AFY. AFY. So that went back in 2017. So we were trading this one. We traded it once. Is that right? Yeah. February 2017. So somewhere around here. From 2.8 to 2.55. Is that right? Yeah, anyway, we got stopped out of that. Then we started, when it changed, I think we had it long from 255. Actually, we still had it long. We didn't get stopped out of that. And then it changed names to APT. Then it started, obviously we know what happens there. Then it started really ramping up. Just checking that it hasn't dropped out. Good. So yeah, it picked up, and you just know when it's getting a bit ahead of itself here. So the talk is going to be when things start getting a bit ahead of itself. Crack $20, um, is really starting to move strong on the upside. That it doesn't matter what the fundamentals are. The pros are going to start shying away from it because you're not going to be starting to buy something that's getting so far ahead of itself. You're just going to let it go because you know that there's going to come some kind of correction. And they are very patient. Some of these bigger boys, when they're playing these stocks, they're happy to wait. They're not just going to start chasing the market because they got volume too. They've got a lot of volume. It's a lot easier if you're doing 10 grand's worth to $10 million worth. It's a lot different ball game. So, I don't even know what they're trading, but it's probably more than that. But yes, there's going to be coming times when it's going to start playing with your head. If you got in, say, below 10, you're up at $20, you're 100% gain. And then it doesn't take much, any sort of news, and then all of a sudden you can get on Twitter and all these sorts of things and see opposing arguments from people generally that are holding it and loving it, saying, "Don't be stupid. It's da da da. It's looking great. This is just a minor blip." And then the other side that potentially waiting to get into talking it down, and then news that's coming out. So all these, and you can easily get swayed on what you're originally thinking. You can change your thought patterns. You can do anything. So it can really sway you, and that's why you get these profit taking. I mean, ideally, you probably wanted to attack it a bit differently. You want to attack it when it's showing a bit of weakness, not just on what's being said, because you know that if you're trading it on the way up here, you know that it's going to have a correction sooner or later. You've got to be serious to yourself. It's going to happen. So you've got to trade it. If you do start seeing weakness, you've got to take some off or potentially close out. If you love it and you think longer term it's going to be great, okay, close some out, put the rest aside, and then trade. Have a core position and then trade the rest around of it. Excuse me, we've got a cough going around the family, so it's starting to kick in now the more I'm talking. Yes, to trade your core, so keep your core and trade around that. Trade a trading parcel as well. Knowing that there's going to be some sort of correction, you can always get back in it. And if it doesn't come back, then at least you haven't got too much exposure over the longer term. You can start trading a bit differently. So if you held a call through here, yep, great. You might have started loading up again back at the start of the year when it started lifting. And you held these inside levels. You can see it's quite clear. One move down, pop up, another move down. Your secondary move down. Start to pop up, retest. That say is about $11. Took off, and this is the good thing. That green candle, when it took off to about these highs at 14, say $15, traded 14.97. Come back down. You can see this action was a lot different to previously spiking down, spiking down, spiking down. That's a lot different. Indecisive candle, indecisive candle. Another indecisive candle, but at least green. Another inside candle on the weekly, and then it started to lift. So that was a higher low building. Okay, in you go. And then it started to lift from there. But what we're happening now is price was starting to get ahead of itself again. Go back to the daily. You can see it's holding nicely. I mean, it's easy for me to say psychology up here. We got out, I think, got out somewhere around 19 from 14. I don't know. Don't ask me why. I still kick myself when I look at it. But, it's holding higher levels, higher lows, higher lows. It's got a bit choppy up towards the previous highs. And then you're going to get that. You're going to get people who have held it through here, like us, really, starting to get a bit anxious. It's getting up there. It's, gaps up. You expect that to be, then you do start looking for reasons why potentially you shouldn't be in or you should be out. Why should I hold? Why should it be out? All that sort of stuff. So the psychology game can really play a factor. I reckon it plays a major factor. One, when you're actually getting into something, because you're reading everything, you're making sure it's a good stock to get in. And two, can you get squeezed out? Will you get squeezed out? Should I hold? Should I book the gains? Or what should I do? And especially no one wants to see when you're sitting on 20, 30, 40% and something just to tip over again, start rolling over like it has just recently. So these sorts of things will go through your head and it's hard to stay the course. And that's where I think you've got to block out the talk, the noise. And this is why I love my charts so much, because I don't think fundamentals can ever show you what's happening. I mean, fundamentals will give you, okay, a reason why, okay, maybe it's cheap. I mean, who knows? I mean, all this is cheap, expensive, all that sort of stuff, but it doesn't give you levels where people are willing to buy, people are buying, because we all know that people buy when it's cheap and it can go cheaper. People will buy when it's extended because they think it's cheap or because they chase it. We know that sort of thing happening there. You can never see that in the fundamentals, but you can see it on the charts. That's why I always find it important to watch my charts and look what's happening with volume and prices and your MAs, just the way I would view it. And then, start assessing it from there, especially when you're in profit. Let's just go back to the chart where we're looking at. This is what we sent out. It might have been an alert, and we put it on Twitter as well. And spoken about it a few times. This, for me, was around here when we started getting a bit ahead of ourselves. This sort of action here, when we started getting down here, when I thought, no, this is not looking that great. It's not looking that strong. I mean, there was a case to say there was no reason. I think we had an alert to buy this for a pop back up through with your stop down here, but it just didn't. I don't think we got into that one. I'm sure we didn't get into that one. No, that's the last trade we had was from 14 up to 19 bucks. All right, so that one there was an alert to get in, thinking, okay, if this holds, we're on our weekly, this is a daily chart. If this holds, it's going to bounce off the MAs. We're going to do the same thing. Then we're going to start attacking those highs at 29 bucks. And then, okay, the bull story is the one that's playing out, and there's not enough sellers. The seller's not willing to jump in now. And I think if you go back, just back to the weekly, sort of measure that leg up and that leg up, that sort of projection up here, if you project it up, was about these highs here. So there was a few things. Oh, no, I don't want to see that. Let's take that down again. Sorry about that. There's a few things that played out where, okay, if it does go up, yeah, it could attack 29 bucks, but it could easily just as easily roll over. And then once it starts breaking down, then what happens? What sort of scenario is going to play out? And of course, you can see what happened. It started rolling over. You've got APRA, authority that's starting to look into APT, Afterpay, and that in itself, just that news came out a while ago, and it wasn't that bad, but what it's done is just kept the bulls away, kept the buyers away. And then sooner or later, it doesn't matter what the fundamentals are, if there's no one buy it, and you've got people locking, they've got some gains, they don't care. Everyone might agree, yeah, the fundamentals are looking great. US, the projection for the US is going to be fantastic. The same with the UK. These stocks it's going to go bananas, but no one's buying it. So if no one's buying it, I don't want to give up my gains. I could probably get it cheaper. So all these things will start going through your head. And that's why I think it's important to look at your technicals to know what's going to play out. And of course, what we saw is that it started to roll over. It did pop up. Now, I remember reading someone that I was following on Twitter talking about, I know they're into APT, saying, oh, it's just, this has happened before. And they're highlighting things out of the talk and all that sort of stuff. But what he's forgetting is the psychology of the trade. He's really talking his book because we know that he's loaded into it. I don't know what his fund is or something, but they're loaded into it. No one wants to see, if you're loaded into it, wants to see it roll over and you give up 20 or 30% of your gains, or probably more, depending on where his average is. So of course they're going to talk it up, but it doesn't make much sense. I mean, if people are reading that, you can't get swayed by things like that because you've got to look at it. We used to say in the industry, they're talking their book. Talking your book means what stocks have I got? I'm talking up those stocks. But when you're trading it yourself, you've got to be looking at it and try to look at it with an open mind. Say, what is their bias? What's the market telling me? Their bias is saying it's going up. Okay, does that fit into what I'm seeing on the charts? Not at all. It's getting sold into, and it's heading south. So I think that sort of thing. This is a good example, and of course, people who may be reading into it, looking, okay, it should be great. It's just another blip. It's going to go back up. We're going to tuck out the highs because of the story again in the US, spruiking it to more shops over there, bigger market, all that sort of thing. But have we factored it in? Have we not factored it in? All these sorts of things will be swirling around in your head. Let it go. They let it go a bit, and then of course you get a couple of red days. Bang, they're going to be bailing. Okay, no one wants to, because what you can see, you can't argue about is the price. You just can't argue the price. What you can argue is the fundamentals and the story, but you just can't argue price, what it's doing. Who cares whether they're right or wrong? Because what you're seeing is that the price is going down. So you've got to know where your risk is. And I think that's the hardest thing when you're sitting on profits like that, is really starting to, especially when it gets to the end of a trend, what's happening, what's going on, is trying to steer clear. And I like to think I do, is steer clear. Actually, this is what I'm working on more, is steering clear into just the talk, the banter, and just looking at it going, okay, if I'm wrong, where should I get out? Where am I going to be proven wrong? And ideally for me, we're looking at this 20, I think it's around the 22 mark, 22.50, this previous low. You can see it touched on there, bounced. So the fact that it's actually broken this uptrend, gone down, it's bounced. And when it started coming down again, you can see the accelerate. That was pretty much your time to bail. And especially on that red candle, which was Monday, Friday, Thursday. This red candle on Thursday would have been the day to go, okay, we spiked up 26, just bail, because it's not, things are not right. I don't know why. And I think that spike there, I'm a bit sus on that. That was on the capital raising. And it's the first time in a long time I've seen a capital raising come out. The price is trading at a certain level. The cap raising was below it and actually prayed up from that price from the open rather than down to the cap raising price, which is a bit sus. I think it just gave a few people a chance to get out and a positive day, and then coming out with the news the very next day on APRA and saying we are going to get an external auditor to help them, with APRA, and then bang, the markets get sold down. So, that's, I thought, a good little example of your mind and psychology in trading. So I've probably got a bit ahead of myself there. Sorry about that, but we've got one CLA. Anything else you want to get into? Is any questions just what I'm talking about? And I'm hoping that people find that valuable, because I think, we've spoken to a few people in the past, and especially new traders, is looking for the system. I think spending the amount of time looking for the system, the trading style, all this sort of stuff, I don't think that's as hard as psychology of the side of trading. And that it's hard to, it's good having a mentor. I've had, I've had Davin in the past, and we do differ the way we trade, but from what his side of psychology is, it's just been really helpful. Talking about why, because he can focus on that really well, and it makes a lot of sense to me. Now, everyone's different. Some people it may not make sense to some people, but it doesn't really matter. Whatever makes sense to you, and if you can trade around that and it makes sense, then you're just going to make sure your stats are okay, and away you go. But yeah, psychology is, I think, a lot bigger area to focus on, and I don't think you can find out much without trading. I was reading something today about paper trading. Paper trade before you go in, you're testing your system, but I don't think it's going to do a hell of a lot for you, because if if say I'm right and psychology is 80% of your trading, then you only sort of fine tuning 20% of your trading strategy through paper trading. The best is to put a bit of money on the line and to find out pretty quickly how, what your common traits are, what you have to work on to be successful and be consistent, I guess. Right, BSL, let's just look at that. Yeah, see, BSL, look at that. It's bounced off the lows. It'd be, and look at it, so I wouldn't go near this just at the moment. Has anyone got this BSL, by the way? So to clear zone, give or take through there, just above, was it $10? Just above $10. And this market's pretty much had, well, you could say that, you could argue that it's bouncing off there, yet to be seen yet, but maybe this trend is the one you're looking at. Who knows? The fact is, it's made a lower high just in here. I hope I haven't drawn too many lines on now. The fact is, it's made a lower high, so sellers, pressed it down. So if this is, I don't like the fact that this could be just profit taking. Something else I don't know. Yeah, the weekly's been hammered a bit. It's pushed back up, and you can see the energy to go from oversold to overbought. The energy from buyers is really to push it up. They couldn't get anywhere near. Last time it was overbought, it was right up around 19. Instead, it can only get to, with all that effort to lift it from support to $15, $4 shy of the highs. So that's a 50% retracement of this move down. That energy, what that's telling me, and this is the way I would, if you're learning or if you're thinking about stochastics, the way I would interpret stochastics is more of the energy between buyers and sellers. And it's quite clear when it's starting to run high and you go from overbought to oversold, there's nothing much in the way of sellers when the market's just taking off. But when it starts to go up, I mean, look at it from here, say from here to here, or even from here to here, it rallied. That was quite strong, bit of a pullback. Sellers coming in, but there was enough buying to soak it all up plus more, and then start running it back up again. Start running it back up in the highs. Whereas this action, where it just come down, there really wasn't many buyers there soaking it up. All right, no one really soaking it up on the buy side. and sellers were starting to come in, so they're starting to chase a bit lower. Okay, we've got to a zone where buyers are willing to step in, bang, up she goes. Problem is, this time round, with this rally, it looks like sellers were starting to step in more, whereas before there was no real selling pressure. The buyers were soaking up. Now it looks like the story has changed, where the sellers are soaking up the buying pressure, and it can't really get up there. And we've had this really, the market just dropped off, touched on 10, and it's gone from overbought to oversold. So that it didn't take much effort from the sellers to ram it back down to 10. Does that make sense? So that's, I'd be steering clear of this just at the moment, because when, like Helen said, it's gone on the daily, it's gone from overbought to oversold. And it's just the reverse of that weekly we just popped up. Actually, where's my weekly? So what we're looking at is this move, this going up here, and the same sort of thing on the daily in comparison to the previous height around 15. So on the daily, it's taken a bit of energy to go from oversold to overbought up here, but it's nowhere near 15. It can only get to roughly around 12, another 50% retracement. So what is that telling you? It's telling you that there's still some selling pressure coming in. We don't know if it's going to hold up at 10. We don't know if the buyers are going to start stepping in and start supporting it. Yeah, but like Helen said, it's very interesting in terms of psychology and what's going on. So what's going through your head? I mean, if you bought it through here, going, oh, look, I'm looking for the highs again at 19 bucks, it starts rolling over. There's going to be a stage where you're going to go, well, hang on a sec, where am I wrong? You've got to know where you're wrong. You have to know where you're wrong. If you don't know where you're wrong, yeah, it can come down and it can come back up in a year's time. You're saved. But there's going to be times it's going to go to zero. There's going to be stocks that are going to take years to come back. I mean, you might say, look, I bought this 5 years ago and I've made 10%. That's not trading to me. That's more buying it, holding it, and hoping for the best. And there are some stocks, I guess, you can buy because they've got good fundamentals and you might take a hit. But I don't think that's trading. That trading is where you know when you're wrong, you can always get back in. And that's the thing, you get out, reassess and get back in. If it still looks strong, you're looking at setting up again, jump back in. All right, I think we just went offline again. Back on board again. It's really weird of 13.37. So it might have been at 13.30 even or 13 bucks even. So it's hard for some people because you look at what you've missed out on. But the idea is that you get out, you reassess it, and if you're wrong, say at this stage you got stopped out, say it was at 13.20, you got stopped out with this little push down and it's starting to ram back up. The technical selling hasn't stopped for me. It doesn't look like it's over yet. You want to see a clear higher low, so you have to just then flip it and say, oh look, I'll wait to see if it starts setting up again, because if it doesn't, this thing could go all the way back down. Of course, by you knowing exactly where you're wrong, you've missed out on this push down to 10.50, and to be sitting, say 20-30% down on that stock. And who's to say that's finished yet? This could just go through, blast through 10 bucks, and back to the weekly. It could be heading back down to 7 bucks. We don't know. But what you're doing is really just making sure that you know what you're doing with your technicals, where your risk is, what are you seeing in terms of price action. Does that match your fundamentals? The price action is going down, but your fundamentals are saying, oh, it's really, really good. Can you question it? Have you got the ability to question it too? The ability to say, look, I don't. I mean, and you've got to know that you don't know everything. As long as you can come to terms with that, there's always some people out there that will know more about what's happening with the stock than you, because what you can always find out is what's in the public forum. What you won't find out is what is not in the public forum, and it's unfortunate that does happen. So I'm always skeptical where fundamentals say they're doing this, this, and this. So yeah, but it's not what you do know; it's what you don't know that's going to cause you problems, and it's going to come. And the only way you can see it is on a chart, because someone does know, and it's not good, they're going to sell. It's as simple as that. Whether it's against the law or not, they're going to sell. And you're going to see that on a chart, and you're going to have to start questioning it. So that's where you're going to have to go, oh, where's my risk? I've got to know where my risk is. And if I get stopped out and it starts to go up, I get back in, because there's going to be times when it doesn't go back up, and it can sit down there for years down at this level, banging around 10 bucks, you're down, and you have to sit there and hold it. And you can make a lot better use of your capital than sitting holding something that's down against you for a long time. Right, a good bit of a sermon today, but that was a cracker. That's actually a really good example too. I like that. And maybe this one's not over. It'd be interesting to see how this goes, Helen. Especially after today's action, down 4.7%. G'day, Shelley. CLA. CLA, there we go. Gino, it's on the way up. Geo. It's looking What am I on the daily? Yeah, it's probably the weekly doesn't say too much because it's not. Yeah, don't worry about the weekly. I mean, one thing the weekly is getting extended up here, but probably not too much to worry about just yet. So I'm not sure. There's something's happened which obviously come down at the start of 27th of Feb, 4th of March. So something's happened, pumped it down. It's been consolidating around the 2 cent mark, so holding. But what you can see is the volume is picking up and it's starting to lift. So that's good. You know, on the daily, it's come back to the MA. So you've had a chance here, another volume come back in to lift it back up, you know, back to about 4.5 cents, pull back to the MAs. And this was the one where the early buyers are buying it, and it's a lot tougher to buy it off the lows before the MAs across. Then you're going to get the other traders, I mean, potentially like myself, sitting there watching it bounce off the MAs and looking to buy there. Then you got you know, the later comers looking for more confirmation that are buying it off the second touch of the MAs potentially. And you can see that when things are good and there's no selling pressure, it starts to accelerate. When it starts to accelerate, that's, you know, it's a good sign that you're definitely on the right side of the market and it's starting to lift like it is now. So if you're a new buyer into this one, I mean, personally, I wouldn't touch it just yet, especially it's up quite a bit from 4 cents to 7. It's nearly double, you know, it probably is double about from three lows of 3.5 to 7. So it's about, give or take, it's about 100% gain from those lows. So obviously I'll be waiting for a pullback to the MAs. I would like to see some sort of constructive pullback, a constructive high-low built, and then a rally. And that would be what I'd be looking for. But either way, that's, you know, it's getting supported by this move up is getting supported by volume. So that's a good one. A2M BAL headed. Let's look at A2M. Glancing at that, down on A2M. And this is a bit like we just talked about APT. Yeah, big run up here. You know, that this is a good constructive pullback, macro correction. By macro, we mean it's the trend is up. This is your first pullback on your, say, on your weekly or your monthly charts, first pullback, and then a rally again. So that's your next leg up. So for me, this on the weekly, this leg hasn't finished yet. The way it's pulled back quite hard down to 13 bucks would get me concerned, because when it's a bullish market, the pullbacks are shallow. If you see shallow pullbacks, that's a good sign of strength. If you don't see the shallow pullbacks and they come down pretty hard, it's a sign where, one, it's either running out of buyers, or if the buyers are selling the same, there's more sellers jumping in, are willing to take profit, are willing to get out, are willing to take some risk off the table up at these higher levels. And the higher you go, the more people are going to start taking risk off the table. It's just a fact. So if you're looking at it that way, back down to the weekly, I'll just draw that weekly up. I want to just go like that. Where's she going? Here we go. So this here, so we've had this leg up here. Obviously, we had this sort of correction, macro correction. Good little pullback. This would have got a few people caught out. I think we were looking at that stage. Then that moved down to whip down, whip some more buyers out, some longer term. So you'd have to look at that sort of trading scenario there. And it's come to that point of growth, then up she goes. If you bought that through 11 bucks, great. So you can see this big corrective action here. And really, I think the anchor is way down around that 7 mark. You know, when it come out of this move up, what was it, consolidated sideways and then took off up to 14. Then it's corrected. It's been a long time, excuse me, correcting sideways and started to lift again. So what we're really looking at now is, we'll clean all this up. Sorry, that's your first leg up. We're looking at this secondary leg. How far? I mean, I'm just put it to this high here. I'm not sure if this is going to be the high of this leg up, or has it got further to go? So that's what we're trying to ask ourselves. Now, the weekly, you've got a clear support just below 13 bucks. Stochastics for me, the sellers are coming in. They're pushing it from overbought to oversold. So they're taking a bit of oomph. Are the buyers holding up like they have in the past? And if we just change colors, I just want to do like this. Okay, it's going to be a bit debatable, and we may have just shown very early signs of this rolling over on the weekly. So that's your trend up, touching on, touching support. touch. Maybe this is a touch, maybe not. We just have to wait and see. If we see this high low starting to hold in here, yep, that was a touch. We're looking to go back up again through 16. If not, we could roll over, take out, say, 1350, and bang. You'll see it clearer on the daily chart. So if we're just looking at it as a zone, potentially a zone to buy. Don't like the way it's come down the last few weeks. Got banged down to 13 bucks. But sooner or later, the cracks are going to appear. If they start appearing, there's enough fuel with this leg up, and potentially people that have held it a long time ago, sat through this corrective, got the second leg up. They don't want to sit through the next correction. So there could be a lot of fuel that's ready to be blown out of this market. We don't know. I mean, it's like I said, it's early stage. It's just probably a lower probability that it's going to continue up from here than it was way back here, or even way back here. So if you just look at the daily quickly, keeping all that in mind, it's again, it's this price action. I'm not too oops, here we go. I'm not too crash hot on. And it's more because this is sort of your key level, even on the daily, around that 13 mark. And the way it's come off that highs, it has cleaned out, especially with the explosion lower from 1450, say, down to 13. I don't even know what day that was. But either way, that's gone banging straight down. And if it was a strong market, I wouldn't want to see that. I really wouldn't want to see that. And you can see that this has been pedantic. It's touched on 13, rejected, but it's actually gone through that trend line. I'm not saying it's not a hard and fast science, but for me, that's a heads up, especially after this price action. It's a heads up to be careful. Now, if this builds a lower high and we start taking out, say, that could be an easy sell off a lower high of 14, risk above 14, say your entries through 1360 on the short side, that could be a good sell because this could really start to trigger some more. If it starts to roll over from here, it could start to trigger some more buyers going, look, I've had enough, I'm out. I'm going to book in my gains. I've sat through this pullback. It looks more to me like it's going to roll over. I'm taking it off. So you're going to be wary of that, Stephen. So just keep that in mind. But so what you'd ideally like to see is this support hold. Don't mind if it's, say, at the moment we've gone, just draw that in blue. We've gone down and we've popped up, so we're about here. What I'd like to see is it come down, retest, and hold some higher levels, like that, and then start to go. So if you're looking for an entry, I'll be looking off that. So you got 1, 2 moves down, cleaned out a lot of buyers, a bit more consolidation of higher lows, and look for your entry. You're minimizing your risk, and up she goes again. And then targeting up towards the 16 mark. But if not, it could just easily go that way, off lower highs. Does that make sense? So you want this to play out and be a lot clearer if you're willing to enter, and if you are long, it's the same. You want it to be a lot clearer whether you get out or get in. Get out or stay in. So I hope that makes sense. So that's it for BAL. Let's just have a quick look at that. Let's see if we can get into Shirley's ones as well. BAL, Bellamy's, yeah, that's going down on the daily, and the weekly's not looking too crash hot. The weekly's a bit of the same, but the fact that it's had this big run up, big massive sell off into the end of the last year, you'll want to see, if you're going to buy it, if you're looking at it, if you like it, fundamentally good. If you're looking for your entry, you want to see it off some higher lows. You want to see a level hold with buyers starting to step in, buyers starting to step in. Well, there you go. Possible entry there, Stephen. But with BAL, the weekly's not looking crash hot. It's below the MA. So look, potentially it's in a zone where it could be a buy, but there's still potentially some selling pressure. The way it's come down here, off 12 bucks, there is still some sellers out there, some stale, longer term buyers that are held all the way through this. They've got back up here. They might have got back to break even or minimize their loss, and bang, they're out. So there potentially is still some selling to come. We don't know. We don't know what's on the sidelines that want to get out, or what's on the sidelines really willing to come in. So at the moment, we just got to keep an eye on it. So this one would be one that I'd just be steering clear of. I want to see it hold up above 7. I want to see higher lows hold. I want to see it give me a clear, hard and fast entry. The fact that it's come down into, say, 7, you can see the buying through here, like say from November to March this year, and then it started to lift, Problem is it's found some resistance, so it sounds some more selling pressure up at 12. It's pushed it back down to this level. So potentially we're going to get a major double bottom. A few tests here, another retest and start to fail. If it fails and starts to hold some higher levels, higher lows, yeah, it could be a go, because then you'd start to think that 12 bucks is going to come under fire. Okay, that's my hypothesis anyway. All right, let's just see if we can get into Shirley stuff there. Let's just have a look at STOR. What am I on? I'm on a 4 early. Let's put it down to a daily. Clear move higher. So the trend is your friend in that one by the looks of it. 35.50, stop loss of buck. 34.50. Just see how it goes. It's 35.50. Yeah, it's just above the high. Look, for me, I mean, could be extended, maybe not. You might get a bit of a flush here, pull back. It might start up and pull back. Who knows? But if it does break the highs, what would you go for on that one? Take a 37.75 up here. Yeah, could just continue on. So that there's pretty clear. It's bouncing. It has bounced off the MAs quite a bit. Good correction here. Another good one back in January. It looks like it's pretty solid. It's well and truly established uptrend, so it's nice. Where's you got KMX? Same. Plugging higher. This one's nice base built through the 57.50. It's really attacking the highs. It's just got into new high territory. I think it's new high territory. But new high territory, it's blue skies. Could easily just keep going. Again, for me, that's too extended for me. I'd rather buy in zones where it's starting to hold high, high, low, and then look for those major legs up. But again, you can't argue when it's going the right direction. AFL. Go to the AFL. Same scenario, isn't it? All going the right direction. So anyone looking at US, there's quite a few there. Yes, and S bucks. Oh, actually, I just want to go back. I don't mind this one because if it's going to break the high here, where's your risk? 53.70. AFL, $1. So 55.12, 54.12. So you're going to be just above this high low. I don't mind that because I would potentially I'd just place it below that high low there, below 54. For me anyway. Break that high, you could have been in on Friday. Yeah, I would have been in potentially Friday, but breaks a new high today. You got that secondary sort of day of expansion higher, and then see where it goes to. What's the other one? S bucks. Again, all these for me, they're too high for me. I know it's following the trend. I don't follow the US. I don't know how it goes. Again, all these ones you popped up there, don't know code, beyond meat. I could probably get that, I guess. It's going nuts, isn't it? Yeah, this one's kicking along nicely too. So Starbucks, everyone loves a coffee. Take out the highs, so you use the daily candles by the looks of it with a dollar stop. So really, you're picking the ones with the trend numbers game. They keep continuing on. You're probably gonna get stopped on some, and some just keep going. So looking good. Thanks for that, Shirley. There's enough ideas there. Beyond. Oh no. Is that it? No, that's not it. That's us. That's definitely not it. All right. Look, we'll see if we can find it. Just jump with $30 in one day. Yeah, I've heard the market cap that's going nuts. But there's also people saying paying the amount they're asking for a burger is just nuts as well. All right, we'll probably have to call it a day there, guys. But thanks very much for joining me. Sorry, we have dropped out a couple of times. Yeah, like I said, my internet is great. Not a problem with the internet. And there's no frames, which is an internet connection. When I see, it's my little tool that I'm using. When you see this here, the frames are dropping. Something wrong with the internet. It's just not strong enough. But the internet's fine. It seems to be OBS, this program that just cuts it out. But we'll look how we go. We'll just keep plugging away. It's doing its job though. Yeah, thanks for joining me. We're back in on Monday at 12:30 again. So if you've got any questions that I probably didn't cover in the talk, or you want to just ask something else, feel free to send us an email to support@tradesetup.com.au and I'll get back to you. And if you can't make it into the stream, but you want me to talk about something, just send it in. Send in the chart. I'll send in the codes you want to have a quick look at to the email address, and then I'll go through them in the talk, in the stream. All right, guys. Thank you very much. BYMD. Just have a look at that. Beyond Meat. Bananas. Look at that. You would hate it. And this is what I'm always skeptical about buying. You know, when things are stretched, I just can't do it. I want to see a pullback. I want to see a flush. You know, buying on this, say you bought on these couple of candles, not so much this one, but you bought on this one. You bought it, say, above 170 or so, and the next day it gaps down to 130. Be a bit of a killer, wouldn't it? Gaps down and it's heading south. So that there is going to flush people out without a doubt. Next day it opens mid-range, a couple of inside bars, and then boom, just on Friday it starts to kick off. Yeah, I know everyone's talking about it, aren't they? I find it funny, but that there, the IPO just gone bananas. But really, your trend line here has got to be somewhere around here at the moment, isn't it? So it's getting a bit ahead of itself, I'd say, up here. So I wouldn't go near it. If you're buying here, for me, it has to go straight up to the highs, otherwise it's going to take out this low. And I'd just be wary of that one anyway. It could be building some support, but if it can come down, retest, and build a higher low off that support zone, off that zone around 123, yeah, it could be worth a buy. But for now, scared of that one. All right, guys. Like I said, thanks for joining me, and we'll be back in on one to watch. We'll be back in on Monday. Have a great weekend, have a great trading week, and enjoy yourselves. Cheers, guys. Bye.